Welcome to Inside the Deal. I'm Suzanne Stevens. With me today is Brette Simon. Brette is a partner at Jones Day. Brette, we're here to talk about how private equity firms are structuring deals. And a big part of that question is the state of the debt markets right now. Are you seeing some thawing?
Absolutely. I was actually just speaking with a private equity group that closed a deal in December. And what you're seeing is a lot more dependence on relationships. If you've done several deals with this bank, they're more likely to give you a little bit more leverage than you're seeing. I think this group actually got a little bit more leverage than I would have expected, in part because they're a regional bank. They don't have some of the problems that some of the larger banks had. So that's one example of going to people that you have long-standing relationships with can be helpful.
So a good sign, to be sure.
Absolutely.
Still, credit is a challenge. So how are deals getting structured in a way that maybe they weren't as much when it was in abundance?
Absolutely. You're seeing some innovative structures. One structure in particular that I'll touch on is it may be that the private equity group will close without any debt. They'll do an all-equity transaction. We're calling it an EBO, an equity buyout. And what they'll do is they'll sort of bank on the fact that they can refinance this in 12 to 18 months. But what they'll do that's innovative is to preserve the capital structure that would have been there if debt was in place from the beginning, is they'll put in a sort of something in lieu of the senior debt. They'll provide it themselves and they'll structure it as a preferred instrument. They get some current pay, they get some interest. It preserves the structure so that when they get refinanced out, the capitalization of the company maintains the ownership between the private equity group and the founders. Because you basically buy out the preferred, they put that piece of it, the senior debt comes in that place, and then the common ownership between private equity and founder remains as it should had debt been there from the beginning.
Is there risk, though, especially in this market, in banking on a refinancing 12 or 18 months
Yes.
down the line?
Oh, you're absolutely right. They're banking on that ability to refinance, and if they don't, you've got a private equity fund that has now put in all equity and maybe structured preferred and common, as I mentioned, but it's certainly a risk. And in fact, another sort of flavor is this, is a mezz fund has said, we'll do the entire debt structure. We would typically just do mezz. We'll do senior and mezz. We'll price it at senior and mezz. If you can't refinance in 12 to 18 months, we're going to retroactively reprice all of that at mezz, even the senior piece. So that's a pretty draconian solution, but if you feel like you're confident you'll get refinancing, you do that deal. But it's risky because if senior gets repriced at mezz, that's an expensive piece of debt.
Any other particular deal structures that you're seeing now that weren't as common, say, 2 years ago?
So the other big flavors of the day, of course, are higher rollover percentages. So you'll see higher rollover equity from the seller. The other part, of course, is seller paper, which is a note. If the buyer and seller have a valuation gap, they'll make that up with seller paper. One other nuance that I've seen is sort of like an accordion feature. If the EBITDA of the business, as the business grows, increases, the amount of seller paper grows. So again, another way to get some additional purchase price. The buyer gets some deductible interest, which is benefit on the tax front. The seller's getting a nice coupon, probably much more than they're getting in the market right now. Not necessarily a bad thing. Installment sale tax treatment because you don't pay tax until you receive the payments. So this accordion feature allows, if there's a valuation gap, the seller to get a little bit more purchase price as the business grows and develops.
Brette Simon with Jones Day, thanks for coming in.
My pleasure.
I'm Suzanne Stevens. Thanks for watching Inside the Deal.